All right. Good evening, everyone. Thank you so much for joining us this evening, and I should say good afternoon to everyone on the West Coast. So, my name is Ed Recker. I am the Director of High School Relationship Management with Sally Mae, and as you can see on your screen, tonight it is all about financial aid offers, and I do want to thank our partners, our friends at NSHSS who have invited us to present on this very important and really timely topic. I mean, financial aid offers, if you haven't received them as of yet, you're going to start seeing them very, very shortly, within probably the next couple of weeks. So it's really important to give a good holistic overview of what they are and their importance. So before we get started, I do want to give a couple of housekeeping items. So first and foremost, tonight's presentation is being recorded. So this is something that after the session tonight, probably sometime tomorrow, it will be available for you all. Also, I did also want to say that I will be answering questions through the Q, or I'm sorry, not throughout. I will be answering questions. You can submit questions via the Q&A. With that said, though, I will go through the presentation in totality and then answer questions thereafter, because we found through these that oftentimes I'm going to answer the question that you've asked. So we just ask that you hold off on any questions, be attentive to the presentation, and know that if I don't answer during the presentation, I will gladly answer that question after the fact. So with that, let's begin. We'll get started here. So tonight's agenda, we're going to go through what is a financial aid offer. We're also going to talk through some key terms that you'll see. We're going to discuss how financial aid offers are determined. We're going to walk through how to decode that offer so you can better understand it and make an apples to apples comparison if you're comparing different schools. And then some things to consider as you make your school choice. So first off, what's a financial aid offer? So after being accepted to college and completing the FAFSA, you'll receive a notification that outlines how much the school will cost and what kind of financial aid you'll receive. And this includes federal, state, and school sources. The notification is called a financial aid offer, but they're also sometimes called financial aid awards or financial aid letters. Just know that these all refer to the same thing. You'll also want to keep in mind that there is no standard format for the offer, so you will need to read each document carefully. Also, financial aid offers may be delivered in several ways. So most of the time they're postal mail, so good old USPS, but you can also get it via email, school email if they've assigned you a school email address, school portals through your student access, all of those things. It can come in any or all of those forms. So you do want to be checking all of those avenues in which you have access to. Also remember that students will receive the financial aid offer, not the parents. In addition, you'll want to keep in mind that your financial aid will most likely be divided between fall and spring semesters. The offer might not list the total cost of attendance, and we're going to talk about cost of attendance in just a little bit in a little more detail. But this may be provided as an estimate and is sometimes a link to the school's website for additional information regarding costs. You may need to take action to accept the offer, such as accept it online, or you can decline or modify parts of the offer, such as a loan. So how exactly are offers determined? Well, it's a little bit of a process, but that's what we're here for tonight. So first, to determine if a family's eligible for federal aid, they must complete the free application for federal student aid or the FAFSA, and you can do that at studentaid.gov. You can start applying as of October 1st. So for all of you seniors out there, you should have you can complete the FAFSA at any point in time if you already haven't done so. Any juniors or younger, you're going to want to wait until juniors for next October 1st, and then any other underclassmen, you'll wait until your senior year. And you'll want to keep in mind that many schools require the FAFSA or some other supplemental application for institutional aid. You can check the status of your FAFSA immediately. So once you hit submit, you can actually check the status of it. You'll want to keep in mind that only the student can do this because the FSAID is required to log into studentaid.gov, and that is linked, and obviously the FAFSA is linked to the student. You will get one of the following statuses. So you'll get processing, which means the application is still in process, and it typically takes 3 to 5 business days to process. You'll get processed successfully. The FAFSA is complete and no further action is required. Missing signatures, so the application still needs the required signatures in order to be formally submitted. And lastly, action required. If you see this, you will need to contact your school to resolve the issue. Now, keep in mind that a lot of times folks will see that their FAFSA has been processed successfully and they think everything is completed, but that's not the case. The school then receives the FAFSA information and, most importantly, the Student Aid Index Number, or SAI. The school then subtracts the SAI from the cost of attendance, or COA, to determine the student's financial need to help determine what types of aid and the amounts of aid are to be included in the financial aid offer. Also keep in mind that the financial aid offer takes into consideration several factors, including cost of attendance, which we've talked about, family income, family size, and number of family members in college, potentially depending on the institution. So financial aid folks tend to have a language of their own, and candidly, I've been using some of it already. So I'd encourage anyone, if you're ever speaking to anyone in financial aid and you don't understand what they're saying, don't hesitate to ask them to pause and explain any terms you may not be familiar with. It's second nature to them, like me, but it may be the first time you're hearing it. So if it is, don't be embarrassed. Ask them to stop and explain it. What does that mean? How is that important? Those types of things. So now that I've given that public service announcement, let's talk a little bit more about these terms. And we're going to start with the cost of attendance, or COA. COA is the estimated cost to attend for one academic year. So that's fall through spring. And depending on the student's enrollment status, it may include tuition and fees, books and supplies, food and housing, transportation, and personal expenses. Keep in mind that COA will vary from school to school, and colleges will probably adjust their COA yearly to reflect changes to any of the elements that make up their cost of attendance. Next, the Student Aid Index Number, or SAI, is a number calculated according to the formula established by law using the information from the FAFSA. Schools use the SAI to determine federal student aid eligibility and the financial aid offer, and states and colleges will often use it for the same purpose as well. Also, your SAI isn't the amount of money your family will have to pay for college, and it isn't the amount of federal student aid you'll receive. Think of it more as a guidepost that helps students determine what types and how much aid to offer you. Unlike cost of attendance, the SAI does stay the same and does not change regardless of what school receives it. So you could be looking at a 4-year private school, a 4-year public, and a 2-year community or technical college. Even though all 3 of these schools will have different and potentially very different costs of attendance, the SAI will be the same. regardless of the school. We've got a couple of other key terms I wanted to touch on that folks may encounter during their journey. So, special conditions is largely what it sounds like. If your family encounters a financial crisis that is not reflected on the FAFSA, contact your financial aid office at each school you're considering. Examples of events that may be considered as a special circumstance include loss of job, separation or divorce, death of a parent or spouse, or extraordinary out-of-pocket medical expenses. Each school could handle these situations differently, and they are not necessarily required to make adjustments. You might also see a note on your FAFSA submission summary indicating that you've been selected for verification, or your school may notify you of this. This is a process that the school must go through to confirm certain information on your FAFSA and its accuracy. Your school will notify you of the documentation you'll need to submit, and keep in mind that getting selected for verification doesn't mean you've done anything wrong. Some students are selected randomly, and some schools verify all students' information to ensure accuracy. So we've talked about a lot of information, and we've touched on the FAFSA, and I know most of you all have already done the FAFSA, but I think it bears covering again, just in case. So the FAFSA, or the Free Application for Federal Student Aid, is the first step in applying for federal, state, and institutional aid. It is perhaps the most important form you'll fill out to determine your financial aid eligibility. If you haven't completed the FAFSA for the upcoming school year, so 26-27, you should do so as soon as possible, as many schools have priority deadline dates. And realistically, most of them, if it hasn't already passed, it's going to be within the next week or so. It's important that you complete the FAFSA as early as possible, largely because some financial aid programs are awarded on a first-come, first-served basis. This also goes for returning college students. So for those students who are leaving for school this fall, please don't forget about it for following years. Returning students don't get special consideration for certain types of aid. So if you apply late, you could miss out on some funding options. For those students applying for college this year, again, keep in mind that those financial aid deadlines aren't the same as college admissions deadlines, so make sure you check for both. And lastly, probably most important, don't assume you aren't eligible for aid because your family's income is too high, because almost every student is eligible for some form of financial aid. Aid eligibility is based on several factors, not just income and savings. All right, so let's talk a little bit more about institutional aid, which is aid that is a specific college or university extends to students. Depending on your school, you may need to complete additional steps, so it's important to check your school's website for information. Some schools may require the College Board's CSS profile for institutional aid, and this can be found at cssprofile.collegeboard.org. The CSS profile is required by more than 200 colleges and universities to award non-federal aid. For these schools, the profile is in addition to the FAFSA. It does not replace the FAFSA. Similar to the FAFSA, it is available on October 1st of each year, and although there is a charge to complete the profile, fee waivers may be available depending on your need. So we're not going to go into great detail about this, but I do feel it's important that we all understand how cost of attendance, or COA, and the SAI, or Student Aid Index, work together and how it impacts potential aid eligibility. So the college subtracts your SAI, so your Student Aid Index number, from its cost of attendance to calculate how much need-based federal aid, such as grants, loans, and work study, a college estimates a student is eligible to receive. And SAI does not vary by college, which we discussed earlier, but the amount of aid your family is eligible to receive will vary by college based on each school's COA. So again, keeping in mind that COA is going to change from school to school, you could be looking at very different financial needs based on what type of institution you're looking at. So now that we've laid the foundation, I think it's safe to move forward and really talk about financial aid offers. So on the screen is a sample financial aid offer that we're going to break down in the upcoming slides. Again, sometimes schools will refer to these as financial aid awards or financial aid letters. And just so you know that these are all the same thing. Also keep in mind that there is no standard format. And this, what we're showing, is a pretty basic example. A lot of schools will have it branded with their school logo and colors, and a lot of schools will have it set up as like a 2 to 4 page booklet. With that being said, there should be some common elements throughout. So the first one is how much 1 year of college will cost, or that COA. Now, this can be a little tricky, and it's something we're going to cover in a bit more detail in an upcoming slide. And I'll explain why in the upcoming slide. It's also going to show the financial aid the school's offering. The hope is that the schools separate the aid into sections similar to what we have on the screen, as there's a big difference in free money, earned money, and borrowed money. And then it'll also show, or hopefully show, any remaining balance. So sometimes it's referred to as what that gap is or what the out-of-pocket cost is. And that will need to be covered through other sources. Another thing to look for is that some schools will count all aid toward covering any remaining balance. Although all aid can be used to cover a remaining balance, it's up to the student and the family as to whether certain types of aid should be used to cover a remaining balance. Again, we're going to talk about this in a little more detail in upcoming slides. So we have some helpful tips on the screen for you, and we strongly encourage you creating a spreadsheet or something else to use as a comparison tool to review the financial aid offers that you've received due to there not being a standard format. So first, try to identify what aid is gift aid, which is aid you won't have to pay back, and what aid you will have to pay back, such as loans, and what aid you'll have to earn. So try to make sure to put them in those 3 buckets: gift aid, aid you have to pay back, and earned aid. You'll also want to find out what that out-of-pocket cost is to attend. Again, hopefully schools will clearly have your total cost of attendance listed, but if not, add up your total college costs, so tuition, fees, food and housing, transportation, books, and personal expenses. Once you have your COA, subtract your total grants and scholarships, again, sometimes called gift aid. Another good tip would be to check to see if that gift aid is renewable each year so that you'll have an idea of what your out-of-pocket will be for future years as well. From there, you subtract your gift aid, so scholarships and grants, from your COA, and that's what you'll need to pay for 1 year of college. Once you get to this point, you'll be able to do an apples-to-apples comparison of the offers you receive from multiple schools. Although out-of-pocket expense is definitely important, it's not the only factor in deciding where to go to school. We always encourage students to discuss their options with the key people in their lives and weigh all factors in, all factors in addition to cost, like the type of school, location, and academic programs, before making a decision on where to attend. And lastly, please remember that students receive the financial aid offer, not the parents. So on the screen, we have a sample cost of attendance. And as we discussed, a key part of comparing aid offers is determining what that cost of attendance is. Some schools will have it clearly spelled out, as well as all the corresponding elements on the award offer, and that's similar to what we have on the screen. Unfortunately, some schools exclude some or all COA elements on their financial aid offer. However, you should be able to obtain it one of a couple ways. Most schools will have the information posted on their website, either on their financial aid page or their student accounts, cashier's office, bursar's office page, one of those. If you'd like a more direct approach, you can always call or email the financial aid office at the school. Although some of the schools may not have all their costs set as of yet, so as of today, they should be able to give you a very good estimate on each of the elements. So we talked a little bit about gift aid or grants and scholarships. The reason we call it gift aid is that it's free money and it doesn't have to be paid back, much like a gift. It's something given. You don't have to pay it back. You don't have to give it back. Grants, which don't require repayment, are typically awarded annually based on information provided on the FAFSA. They're offered by numerous sources, such as federal and state governments, colleges, and independent organizations. Although numerous grants are state and school specific, there are two major federal grants I'd like to touch on: the Federal Pell Grant and the Federal Supplemental Educational Opportunity Grant, or FSEOG. The Federal Pell Grant is a need-based grant with awards up to $7,395 for the upcoming 26-27 academic year and are awarded to all that qualify. FSEOG, sometimes called SEOG, are awarded to students with exceptional financial need. These awards can range anywhere from $100 to $4,000 and are awarded on a first-come, first-served basis. So with a federal Pell Grant, if you're eligible, you will receive it. With SEOG, that may not be the case because it is awarded on a first-come, first-served basis. Each individual school gets their own limited amount of FSEOG funds to award to students. And this is a big reason why we always encourage students to file the FAFSA early, as it helps ensure that a student will get some FSEOG funds if they qualify. State grants are a little bit tricky because the criteria and the process will vary from state to state. However, generally speaking, states do have a deadline, so make sure to check with your state Department of Education for their specific deadline. After you determine the net cost, or in our example, the school gives you the net cost, it will start to present options on how to pay any remaining balance. One of those options may be federal work study, a need-based federal aid program. Although not listed in our example, some schools may also offer their own work programs. So a little bit more information about federal work study or employment programs in general. They provide part-time jobs to students as part of their financial aid offer. Now, work isn't free, but it doesn't have to be repaid. We consider this self-help aid as it's typically used to cover indirect costs. So with federal work study, it is based on financial need and the FAFSA is required. And similar to SEOG, the funds are limited per institution. Now, schools that offer institutional or campus employment, they may or may not require the FAFSA. So that's going to vary by college. And it could be based on the needs and funding at each college. Now, for both, these work programs could be on or off campus positions. They will pay at least minimum wage. The hours will be limited. And what I mean by that is, generally speaking, 20 hours or less per week. They may be tied to academic interest or major, but they may not be. There are often a wide variety of jobs on each campus. So when I worked on campus, we had work study students that worked in the financial aid office, for example. And lastly, students receive a paycheck for their work. So if they don't work, they don't get paid. And this is a reason why we strongly recommend that you do not factor this in when you're calculating your net price, because it's money you have to earn and you have to earn it over time. It's not guaranteed. Lastly, if you decide to participate in a work program, make sure you find out if the school will assign you a position or if you have to find your own. The next option for paying any remaining balance are federal student loans. These loans are provided by the government and must be paid back with interest. There are two types of federal student loans for undergraduate students: federal direct subsidized loans and federal direct unsubsidized loans. The borrower is not billed interest for federal direct subsidized loans during the in-school period or grace or a post-school deferment. In a federal direct unsubsidized loan, the borrower is responsible for paying the interest during the in-school period or grace or post-school deferment. Also, some schools may include a federal Parent Plus loan in this section, and we're going to talk about that in a little bit. But it's very important to understand that a federal Parent Plus loan is not a student loan. It's a loan solely in the parent's name and has very different rates, fees, and features than federal direct subsidized and unsubsidized loans. You'll want to pay close attention to this and note within your comparison. So a little more about federal direct subsidized and unsubsidized loans. The U.S. Department of Education has annual and aggregate limits on how much you can borrow through these programs. So for first-year students, it's up to $5,500. Second-year students, up to $6,500. Third and final years, up to $7,500, with a maximum amount a dependent undergraduate student can receive during their degree program of $31,000. Now, when I gave you those maximum amounts, that was a combination of both programs combined. Also, borrowers are charged what's called an origination fee, which you can see on the screen. These fees are subtracted from the loan prior to disbursement. However, the borrower will have to pay back the entire loan amount, including the origination fee. Schools receive the loan's proceeds minus the origination fee, so the borrower does not get the full amount they borrowed. So, a very quick example, if you as a student borrowed $1,000 in either a subsidized or unsubsidized loan, there's approximately a 1% origination fee. You would borrow $1,000, you would have to pay back $1,000. However, the school would only receive about $990, and that's all that would be applied to your bill. Borrowers are afforded a one-time 6-month grace period, and interest accrues throughout the grace period. There are also various repayment periods and plans, anywhere from 10 to 25 years, and there are several different deferment options, including in-school, economic hardship, military, and so forth, depending on your situation. So this slide illustrates the difference between cost of attendance minus the gift aid, so scholarships and grants. If done per U.S. Department of Education guidelines, this should not include federal student loans or work study. In the example, even though we've subtracted those three awards, so we've subtracted the scholarships and grants, and even if we did subtract the $5,500 in federal student loans, there'd still be a balance due. But there are additional options available for you. But before we talk about those options, I want to point out that some offers may show a zero balance. Although this may indeed be the case, which would be amazing, meaning you have enough scholarships and grants to cover your entire cost of attendance, we encourage you to look closely to see what aid is included to get you to a zero balance. Sometimes schools will package Federal Parent Plus or private loans to cover any gap, and they may count federal subsidized, unsubsidized, and or federal work study to cover that gap as well. Please be aware of what aid is being offered to get to that zero balance, as it can be misleading. Remember, technically, this should just be your cost of attendance minus scholarships and grants. So I wanted to give a little more information about the various ways to cover the remaining balance. So we've already talked about subsidized loans, unsubsidized loans, and federal work study. But there are also other options out there. So let's start with free money first, which is always the best kind of money. And in this case, that's outside scholarships. Outside scholarships are free money awarded by an outside party, third party, and can be based on things like academic achievement, financial need, community involvement, organizational membership, sports, talent or skill, leadership or school activities, ethnicity, religious affiliation, parent affiliation with work, clubs, or activities. Students need to make sure to ask their school how they apply outside scholarships. So colleges and universities, how they apply those scholarships. Will it be added, or will it reduce their other financial aid? I would also encourage students, when they're looking for outside scholarships, the first and probably best place to start is with their school counselor. There are online search engines that can also help with finding scholarships as well. Other options to pay any remaining balance include college or other savings plans, like 529 plans, Coverdell savings accounts, or other savings earmarked for college expenses. 529 plans and Coverdell savings accounts are money saved that can be used for any qualified higher education expense, including tuition, fees, and certain food and housing costs. Earnings grow tax deferred and are free from federal income tax when used for qualified higher education expenses. With that being said, we encourage you to please consult with a tax advisor regarding these types of accounts. Two other options available to cover remaining balances are tuition payment plans, as well as private and federal Parent Plus loans. So schools themselves will often offer tuition payment plans to help cover any remaining balances. These plans allow you to spread your payment out over time, typically over a semester or an academic year. These plans may have fees or interest charges that vary by school, so check with your school regarding their particular plans. For parents, keep in mind that you may have costs today while your student is home and in high school that you can allocate towards college costs. Think costs associated with sports or extracurricular activities that you can allocate towards colleges. Plans typically allow you to make monthly payments over a number of months, and that's determined by the school, rather than make a lump sum payment. There is typically a fee to participate in the program, which varies by school. So sometimes people will ask if they could split up a payment. So instead of doing a full payment plan or doing a full Parent Plus loan or a private loan, could they do maybe some in a loan and some in a payment plan? And most schools will allow that. However, we do encourage you, if that's a path you'd like to take, you need to let the school know that that is indeed how you're going to go about it, as the loan needs to be in place before you enter that payment plan. So it's time to dive into the loan options available to students and parents to cover any remaining balance. Private student loans are a loan where the student is the borrower, but families can share the responsibility with the student when a creditworthy individual co-signs a private student loan. Some lenders offer the option to defer payments while the student is in school, but interest accrues during this time and is added to the loan's principal amount when the deferment period ends. This process is called interest capitalization. Federal Direct Parent Plus loans are a federal loan for parent borrowers. Repayment typically begins immediately, but parents may elect to defer payments while the student is in school. But interest accrues during this time and is added to the loan's principal amount when the deferment period ends. Again, this is called interest capitalization. Lastly, private parent loans are a private loan where the parent or another creditworthy individual is the borrower. This allows the borrower to help the student achieve their educational goals without any additional financial burden for the student. Repayment typically begins immediately, and some lenders offer borrowers the ability to make interest payments while the student is in school. So we just did a high-level overview of these programs, but it's important to dig into some of the details to better understand the differences in these loan programs. Students and families should weigh their preferences based on what each product type has to offer when choosing the best financing option for them. So a Federal Direct Plus loan only offers a fixed interest rate, which is 8.94% for this year, one price for all. Private loans, in most cases, offer both fixed and variable rates, and that's at the borrower's discretion. Private loan interest rates are based off of several factors, including creditworthiness. Each lender will look at a borrower a little differently, which may result in different lenders offering different interest rates. There is an origination and disbursement fee on the Parent Plus loan, and that is higher than the student loan. It's 4.228%. Private student and private parent loans usually do not have an origination fee. Applying with a cosigner on a private loan may increase the likelihood of the student being approved. Federal Direct Parent Plus loans require the parent to make payments for the life of the loan, but some lenders on private student loans offer the option to release a cosigner after meeting certain requirements. The Federal Direct Parent Plus loan is a loan in the parent's name. And I probably sound like a broken record here, but this is very, very important. And it's something that's often misunderstood. Because it's in the parent's name, it is the parent's responsibility. And there is no mechanism in place to transfer the responsibility to the student. In other words, the loan is legally the parent's responsibility until it is paid in full. Payment flexibility is also important to a lot of borrowers. Federal Parent Plus loan borrowers for new students as of July 1st, 2026, so this upcoming year, are only eligible for the standard repayment plan. And you'll want to go to studentaid.gov for more specific information. Private student loans and private parent loan payment options will vary by lender, so we encourage you to contact individual lenders for their specific repayment options. You know, I'm often asked which path is the best. And I think the best advice I can give is that families should sit down and have the conversation about the cost of college, how it's being paid, and by whom. Having this conversation and level setting some expectations will help tremendously as you explore your options. If the parent wants to shoulder the responsibility, then maybe a private parent or Federal Parent Plus loan is the best option. If the parent wants to help but doesn't want to shoulder the responsibility for the life of the loan, perhaps a private student loan with a parent co-signing would be the best option. These conversations will help guide your path moving forward. So just a little bit more information about the Federal Direct Parent Plus loan, and a lot of this we've already covered, so I won't go over this line by line. So we've already talked about the interest rate. We've already talked about the origination fee. A little bit more of an example on the origination fee. Again, using simple numbers, if a parent borrows $10,000 with that 4% origination fee, only about $9,600 will get sent to the school, but the parent will still owe the full $10,000. The student must complete the FAFSA in order for the parent to be considered. The student must be enrolled at least half time. We had mentioned that it's a credit-based loan and the parent is the borrower for the life of the loan. New and important, as of July 1st, 2026, for new borrowers, a parent can only borrow a maximum of $20,000 per year per student in a Parent Plus loan, and the most they can borrow for a particular student over the life of their academic career is $65,000. So they have put caps on yearly borrowing and total borrowing for the Parent Plus loan. Lastly, if the parent applies and they're not eligible, a dependent undergraduate student may receive an additional $4,000 in an unsubsidized loan. Private student loans, again, we've talked a little bit about this, but we'll go into a little more detail. These loans are funded by banks and credit unions, so not the Department of Education. It's not a federal loan. A FAFSA is not required for these loans, but some schools will want you to fill out the FAFSA before you'll be considered by them. And these are credit-based. The repayment period and terms are going to vary from lender to lender. So we again encourage families to do their research to determine which lender and repayment terms best fit you and your situation. Private loans can cover up to 100% of the school certified cost of attendance, minus any other aid received. And because most private loans have a zero origination fee, you'll need not borrow extra to cover any fee costs. Cosigners may help increase a chance for approval. And because terms and costs will vary wildly between from lenders to lenders, we actually encourage you to shop around, as private student loans from a credit bureau perspective are treated like a mortgage or an auto loan. So what I mean by that is you can apply to multiple lenders within a 30-day window, and it only counts as one inquiry on your credit. So it won't damage your credit as long as you do it within a 30-day period. So as we near the end of the presentation, we want to give you a short list of helpful tips to kind of take away. So carefully review the information on your FAFSA submission summary, accept or decline your aid offer with your school if you need to. Remember that you don't have to accept all types of aid offered, like loans and or work programs, if you don't want them. Understand any renewal requirements for grants and scholarships. Compare the terms, conditions, and details of each offer and aid type, and consider more than just the dollar amount. And lastly, compare financial aid offers by looking at both the total amount of aid and the types of aid offered. Again, to make it easy, you can use a worksheet like something like a spreadsheet, or you can potentially find some online that are already pre-created. So in conclusion, we always recommend folks take a 1, 2, 3 approach when it comes to paying for college. So first, start with money you don't have to pay back, which are obviously scholarships and grants, and apply for scholarships. Second, apply for federal and state aid by completing the FAFSA. And then lastly, if you need any additional funding, consider a responsible private student loan or a Parent Plus loan. All right, gang, that concludes our formal presentation. I'm going to stop sharing here, and we're going to go to the Q&A. Let's see here. All right. Here we go. There's the Q&A. Okay. So folks, if you have any questions, feel free to drop them in that Q&A section. I'm more than happy to answer them. I am going to take a quick drink. I do see we've got one question, but I'm going to take a drink quick and then I'll get to that. All right. So the first question we haven't applied for any outside scholarships yet. Are we too late? So I would say that the clock is definitely ticking, but it's not too late. So I would encourage you to reach out to your school counselor. I would encourage you to check out some of the online search sites out there. So the College Board and Big Future has a great scholarship search engine. So school management systems oftentimes have them embedded in them as well. So such as like Naviance and Maya Learning, oftentimes they'll have scholarship searches embedded in them. So it's not too late. I would encourage you to start looking pretty much immediately, but no, you're not too late. All right. So if a school offers its own loans, do they need your credit score? So realistically, that depends on the school. I'll be honest, I haven't heard of a school that has their own loan program requesting a credit score, but you'll want to ask them and talk to them directly about that. Generally speaking, again, I believe no, but you'll want to check with them for their individual criteria. Good question. So next question is we filed the FAFSA, the school received the data, three schools have sent acceptance letters. Will they automatically send financial aid offers? So the short answer is yes. Yes, they will. So oftentimes, and we kind of alluded to it in the presentation, schools have different timing when it comes to this stuff. Um, and state schools especially, and they have their reasons. State schools tend to send them out a little later, usually starting about right now through the first part of March. And the reason being, and folks, I worked at a state school, so it's not all their fault. A lot of times, it's their board of trustees, their board of regents has yet to set tuition and fees for the upcoming year. Because of that, they can't really accurately even estimate what those tuition and fees are going to be. So it takes them a little bit to get those set. Once those are set, or once they have a pretty good estimate, they will send that out. So I would just encourage you, patient. If you're feeling like, okay, I really need to know, I would just reach out to the school and see where they're at. And my guess is that they'll give you a similar timeline to which I had just given you. So all right. So let's see here. How's my path looking, and what should I do if I want to pay uh, pay the tuition before August? So so I would say if you've received your financial aid offer, you should have a good idea as to what your path looks like in terms of a gap or things of that nature. If you want to pay your tuition before August, a school would absolutely welcome that. Now, that said, they're going to want you to wait until they send you their actual bill. Now, that usually doesn't happen until I would say June or July. So again, I think it's fantastic that you're a go-getter and you want to get that paid immediately. And for the most part, the school would welcome that, but they're going to want to wait until that actual bill is generated. So probably in June or July. And then once you get that, the school would absolutely welcome payment. All right. So next question, do schools send financial aid offers before paying the admission fee? So so I'm guessing, I think admission fee, I think oftentimes folks will refer to that as the deposit, the admissions deposit as well. And generally speaking, yes, they will. They will send you a financial aid offer before you pay that deposit fee or admission fee. Now, now again, I think because depending on the school, we're right in that timeline right now when a lot of them are sending them out right now or within the next 2, 3 weeks. So I would follow up with them just to make sure that they have all the information they need. But generally speaking, they should be coming out soon, and you should not have to pay your deposit before getting your financial aid offer. So again, great question. Great questions tonight, gang. So most of our applications for college were due January 1st to February 1st. We're expecting decision letters in March or April. So I'm confused how many people are already accepting financial aid. So generally speaking, and this is a great question, and I think what, if I'm reading between the lines here, uh, I think your question is, are we putting the horse or the cart before the horse, if you will? Generally speaking, especially for highly competitive schools where if they're not sending out decision letters until March or April, there shouldn't be that crossover. There really shouldn't. I mean, very rarely, I know the schools that I worked at, you wouldn't get a financial aid offer unless you were accepted to the institution. So unless these schools were uh, early action, early decision, there shouldn't have been a case where they were accepting admission, or I should say, getting financial aid before admission. And even then, again, we're putting the cart before the horse. The admissions offer should come before the financial aid offer. Very rare occasions have I seen it happen the other way around, because I think, to your point, it just provides a lot of confusion for the student. All right. What scholarships can I apply for outside of my school? And then we get into some tuition specific information. So I would say, talk to your school counselors. Um, Oftentimes they have local scholarships. There are some really good scholarship search engines out there on the web that aggregate national scholarships as well, national and regional scholarships. So I had mentioned Big Future by the College Board, and I actually believe, goodness, I believe NSHSS has one on their website as well. So it's hard for me to say specifically which ones to apply to, but I would just say, I always tell folks, keep your eyes and ears open. There are scholarships out there. It's not too late, but I would really get cracking on it as soon as possible. And if you haven't spoken with your school counselor, I would encourage you to do so sooner rather than later. So next question, I'm a high school senior. I'm hoping to get as much scholarships and grants as possible. Um, how long can I delay considering getting a loan, even if loans are offered as part of the financial aid package? Oh my gosh, this is a fantastic question, and I'm so glad it was asked. So, for your federal student loans, so your subsidized and unsubsidized student loans, I would say that you can wait as late as probably a couple of weeks before your bill is due. And when I say that, I'm talking kind of like the drop dead date. So oftentimes, if classes start in middle to late August, they're going to want the balance paid usually by August 1st. So I mean, you could wait until mid-July to do really any of your student loans. Schools, especially the federal student loans, a subsidized and unsubsidized loan, you need only to accept the loans at the school, which generally is just active acceptance, which would be completing your master promissory note and your entrance counseling. That's all done online on studentaid.gov. So that's for those. Now, with a Parent Plus or a private educational loan, if you were going that route, you would have to have an approved application on file probably around the same time. So with those loans, it does take a little bit longer to process, and the school needs to know that those funds are coming. That's all electronically communicated to them, but it never hurts if you're going that route as well, to just let them know, hey, I've been approved for this loan. You should be getting the information shortly. And the lender, whether it be the U.S. Department of Education or a private lender, will communicate that to the school electronically. But great question. I'm glad you asked it. You can really hold out until almost the last moment. And lastly on that, and then I'll move on. The other neat thing about any student loan is that if you get scholarships after the fact, you can just have the school send the money back. Send that loan money back. That way you aren't even charged any interest for it. So if you got a last minute scholarship that covered so much you didn't need the student loans, that scholarship would go on your account. You just go in the financial aid office and say, I've got a credit on my account now. I want all my student loans sent back. And you could do that and it would be like the loan never happened. So great question. Great question. Could the financial aid offer come after several weeks of admissions acceptance? So the answer to that is yes. So sometimes that lag, sometimes they come almost concurrently. They happen almost hand in hand. Sometimes there's a short lag or even a long lag. So a couple examples I'll give you. So I worked at a four-year public institution. So I'm in Northwest Ohio. So I worked at Bowling Green State University. I worked at a two-year community college, so Terra State Community College, and I also worked at a four-year private institution, the University of Findlay. The timing on all of those for all of this was incredibly different. So University of Findlay, four-year private institution, we didn't have to wait on our board of trustees or board of regents to set tuition. We knew what it was. We would set that early. So we would start admitting students. We would start admitting students in September, October. We would start sending them financial aid offers sometimes before Thanksgiving. As soon as we could get it out, we would get it out because we wanted you to have that information. When I worked at Bowling Green, similar with the admission cycle, we'd start admitting students in September, October. But because we had to wait on our board of trustees and the board of regents, we wouldn't send out financial aid offers until end of February, early March. So there was a huge gap there. And then with the community college, we would try to send them out. It was really similar to what we did at Bowling Green State University. So it could be anywhere from September on with admissions, and then financial aid offers wouldn't go out until March. So that's a great question. There can be a huge gap. I know that there's some angst with that, and I fully get that and appreciate that. I would just encourage everyone that if you're feeling that angst and you're like, where's it at? Just go ahead and contact the school. Quick email, quick phone call. A lot of them have chat or IM or something of that nature. Just reach out to them. They'll let you know, and they'll give you a timeline so that you don't have to get anxious about it. But I get what you're saying. You know, we're getting close. It's getting close to decision time, and it's important. So great question. Great question. All right, those were all the questions in the Q&A. I'm going to take another drink of water. I'll give you one last chance to get one in. We're nearing the top of the hour, but I'll give you just a little bit more time if you have any other burning questions. All right, I'm seeing none here. Well, folks, thank you so much for this evening. I hope this webinar was helpful and insightful. I also, again, want to thank our friends at NSHSS for inviting me to speak with you all tonight. I hope it was helpful. Again, best of luck moving forward, and I know you're all going to do great. Thank you so much, and enjoy the rest of your evening. This concludes our webinar. Thank you. Have a great evening.